Good afternoon, everyone. Welcome to GRESB 2021 real estate results. We are going to start the sections shortly, just waiting for a bit more people to join us. Thank you. Good afternoon, everyone. Welcome to GRESB 2021 real estate results. I am Ada Choi, Head of Occupier Research for CBRE Asia Pacific. I think CBRE is very delighted to host this event today. Just recently, we have announced its commitment to achieve net zero carbon emission by 2040, 10 years ahead of the goal set in the Paris Agreement. I'm sure our participants in this event can feel the rising importance of environmental, social, and governance issues. This week's highlights will be the COP26 Climate Summit that world leaders are being asked to accelerate action on climate change and commit to more ambitious targets on carbon emission. Asia Pacific, particularly emerging Asia, is under the bigger pressure to reduce the emission. Carbon emission in APEC has already doubled in the past 2 decades, while the emission for the rest of the world is peaking or peaked. We in APEC accounts for about half of the global carbon emission. Our region is particularly vulnerable to the environmental and climate risks that come with rapid urbanization, and that many of our developments are highly concentrated in coastal cities, from Tokyo to Shanghai, Hong Kong, Singapore, and Sydney, many places that probably you are here. As real estate is accounting for 40% of the total carbon emission globally, our industry has to act fast to respond to the ever stronger desire to protect the environment. Major countries in the region have already announced a more concrete timeline to achieve carbon neutrality. Japan in 2050, China by 2060. Real estate takes time to build. From urban planning to completion, it could easily be a 10-year project. So we have to start now in order to create a resilient, future-proof portfolio. For corporates and tenants, the new requirements on sustainability disclosure will prompt them to review the current consumption pattern. They are examining the ESG aspects across the whole corporate real estate life cycle, from planning, transaction, construction, operating, and measuring. But for landlords and investors, ESG, green building performance, is becoming a more important factor for them to make decisions for investment. So along this journey, of course, we need to constantly monitor and benchmark our performance. So we are very delighted to hear what's the result from GRESB in 2021, as well as our panel discussions today. Thank you very much. I hope you enjoyed the section. With that, I would like to pass to Emily Delaney, the Director of Research and Professional Standards for ANREV, to give us an introduction. Emily, please.
Good afternoon, everyone, and thanks very much, Ada, for the kind introduction. I'm already introduced, so I won't talk too much about me, but just about ANREV. So we are, for those who don't know us, the industry association for investors in non-listed real estate funds in Asia Pacific. We publish research indices of performance of funds, and we promote standards, including ESG. I'm very pleased to be invited today for the introduction of the presentation of the 2021 GRESB results for Asia. Unfortunately, I can't disclose participation numbers yet, and will leave it to Ruben, but I would like to say that the growing part of real estate investment universe in Asia Pacific is also growing through the participation to the GRESB survey, which is really fantastic. As Ada mentioned, we are in Asia and in Asia Pacific at the forefront of climate change. Our industry is recognized as a large, not to say the largest contributors of energy use, and I'd already quoted the numbers, so I won't repeat that, but really the evidence on climate risk is compelling investors to reassess core assumptions about all their investment, obviously of real estate investment as well. Responsible investment is not a trend. Is it there to acknowledge the relevance of environmental, social, and governance factors in investment decision? ANREV members, some of the largest investors in the world and their managers, have already placed sustainability at the center of their investment approach. And I think we can say that we are really at the edge of reshaping fundamentals of real estate investing. It is therefore ANREV's duty to acknowledge that impact and try to accompany our members in their path for more responsible investment. I have to say, recently, one investor have asked ANREV to issue a statement about our commitment to net zero. And obviously, we are not an asset owner, not an asset managers, because we are not in control of direct asset, but we do strongly support the Paris Agreement. We would like to give our members all the support we can in that regard. And I think that's really interesting that institutional investors really are pushing for that here. So just to mention a few initiatives ANREV is working on. So obviously we endorse the ANREV guidelines in Asia Pacific. We promote the sustainability reporting guidelines to our members. We have a dedicated sustainability committee where leading asset owners and managers are helping us to provide members relevant discussion and the latest regulatory information on ESG and climate change. We also obviously publish case studies and working on a lot of different webinars. One of the latest initiatives that I'd like to mention is that we are partnering currently with a large institutional investor to conduct a study on the net zero carbon pathway for assets in Asia Pacific using the CREM tool. For those who don't know, it's a carbon risk real estate monitor. And this is really the occasion to test the tool in the region and the opportunity as well to prepare our industry for adoption of pathway to net zero. Finally, we are obviously partnering with GRESB for numerous initiatives in the promotion of net zero and ESG initiatives. And we hope that GRESB can contribute to change the climate action. So I can go on, and I will have to stop at some point. I guess you want to hear about the results of this year's survey and the panel discussion. So I'll hand over to Ada. Thanks again.
Thank you, Emily. So with that, I would like to introduce our panelists today. We have Jade Feinberg, Vice President, Sustainability and Sustainable Finance from SGX. Hi, Jade. And we have Chong Jun-yi, from the Chief Investment Officer from UOB Asset Management. And we have Sam Carson, from Head of Sustainability for CBRE in EMEA. Good morning, Sam. And finally, we have Robin Lambrecht, Head of Asia Pacific for GRESB. Hi all. Thanks for joining us today. So yeah, let me start with Robin. Could you share, I think everyone is waiting for you to highlight the GRESB results for the benchmarking. Would you like to share the slides and go through some of the highlights?
Absolutely, and thank you for the kind introduction, Ada. And of course, welcome to all online participants. As many of you that are joining us today online will know that GRESB provides validated ESG performance data and peer benchmarks to our industry, which means to institutional investors and of course, importantly, back to the real estate companies and managers that report to us as well. And we do this to improve industry best practices on ESG and support engagement and investment decision-making processes, which all lead to more sustainable outcomes for a sector, which is exactly the mission of GRESB. And we've done so quite successfully, if I may say so myself. Over last year, we saw a very strong growth in institutional investors joining GRESB as investor members. And they now use our data and our tools to support responsible investment strategies. Currently, we serve over 140 investors globally, representing almost $48 trillion in assets under management. And according to my calculations, that's more than 100 times the market cap of Alibaba. So that's quite a sum. Now, what's important to understand is that this weight of institutional capital is driving participation in the global GRESB benchmark, which took another leap forward this year. Participation grew by almost 25% globally, and also here in Asia, to a total of 1,520 entities globally, both listed and private. And this is the highest growth we've seen since 2012. And for the second year in a row, this growth mostly comes from Europe, driven by both investor demand for ESG performance data, but also by emerging regulations. And we'll hear more from Sam what those regulations in the EU look like. Europe currently accounts for nearly half of the entire benchmark, while the Americas and Asia Pacific represents a quarter each. And here in Asia, we saw particularly strong in growth coming from China, Japan, and from Pan-Asian funds. Our global benchmark now covers $5.7 trillion in assets under management, and nearly 170,000 individual assets were reported to GRESB. So let's have a look at how those funds and assets performed in this region. I believe, well, I hope by now that most of you will recognize the GRESB model, which breaks down global ESG scores or GRESB scores into two components. On the y-axis, we have the management component, which assesses ESG leadership, strategies, policies, and disclosures. And on the x-axis, we have the performance component, which assesses actions, tenant engagement, data monitoring, and environmental impact. And when we look at this year's GRESB model, we can see another year of improvements in overall GRESB scores, but particularly on the performance component. And we'll have a look at where those improvements come from later on. This year, the global average score increased to 73, up from 70 last year. But importantly, here, Asia, this region, maintains its second place globally, leading Europe and the Americas. Pretty good achievement. This region's average score is 75 compared to 70 last year, so another strong improvement from year on year. And this shows that when you shine a light on something, you tend to improve it. By simply measuring your ESG performance, you have an incentive to get better year on year. And because at GRESB, we share the best practices from the leaders back with the industry, it allows all real estate companies and fund managers to adopt these and perform at an increasingly higher level. That's the power of transparency on ESG performance, and it's shown in a GRESB model year on year. If we look more granular at the GRESB results for Asia, then we can see significant increases in scores were noted across almost all ESG aspects that are covered by the assessment. And in particular, this region noted very strong improvements in ESG policies, stakeholder engagement, and environmental data monitoring. And at the same time, major reductions in water consumption and carbon emissions were achieved as well. So that's great for the environment. And of course, for some of the commitments that we already heard from Amélie and from Ada. And looking at some of those reductions, it's interesting to see that the impact, or the reduction in impact, environmental impact, was nearly threefold from previous years. So that's massive in this region alone. Of course, it's easy to attribute this to the effects of COVID, where we've seen people working from home, having to stay at home, live at home, teach their children from home instead of at school. So of course, that will impact the environmental performance of buildings. But when we separately surveyed our participants on how COVID has affected their portfolio performance, it was quite interesting that they replied that these reductions are not just due to the pandemic. Participants are also making significant improvements in their buildings and portfolio. implementing efficiency measures for water, energy, and engaging with the tenants. And this is also shown by the increased ability to report on material environmental metrics. As here in Asia, real estate companies and fund managers improved their data coverage across all property types, with the exception of healthcare. By the way, not sure if that was COVID related. This is it so far. I'll present a bit more results later on. So now back to you, Ada.
Thank you. Okay, so let's start talking about responsible investment with our panel. I think business leaders and investors have becoming very committed to ensure that their investment are responsible and also benchmark beyond the financial goals. Investors and the society are demanding higher transparency and performance targets on sustainability, but not only on the business, but also on their corporate real estate portfolios. So Jade, I would like to start from you. As the Singapore Exchange, what is the approach to promote responsible investment and sustainability among the listed companies? And also for SGX as a business, what is the policy towards ESG?
Thanks, Ada. So there certainly has been an increasing momentum in sustainable investing, with investors increasing their portfolio allocation to sustainable investments. Reiterating what Amelie said in her introduction, it's important that investors not see sustainable investing as just a trend, but rather as an evolution of the investment strategy itself. According to a BCG report, which was released last year, Asia needs the largest amount of climate finance investment, estimated at approximately $66 trillion over 3 decades. This is more than half the investment required globally to achieve a scenario of limiting temperature to 1.5 degrees. The financial industry and capital markets, together with market infrastructure operators like SGX, play an important role in facilitating capital flows to finance decarbonization and transition efforts. Exchanges also provide transparency, price discovery, and liquidity. Governments and public sector organizations can then further catalyze and accelerate some of these initiatives. So SGX, with our sustainability vision to be a leading sustainable and credible transition finance and trade hub with end-to-end product solutions and ecosystems, occupies a unique position at the heart of the financial ecosystem, where we see our role as a key player. And we see it in 4 pillars. So as a company, to provide demonstrative and thought leadership; as a business, to offer ESG products and solutions across asset classes; as a regulator of listed companies, to guide markets on sustainability-related disclosures and ensure all investors are able to access decision-relevant data. And if we tie this all together, our work is focused on building an ecosystem to be a positive influence and foster collaboration and partnerships between stakeholders, whilst also future-proofing businesses to build capacity in the ecosystem. So we're conscious that industries and companies are at different stages of their sustainability journey. Climate change has various implications on their business models and processes. So at the forefront of our thinking always is how we can assist stakeholders, particularly without leaving anyone behind.
Thanks a lot for sharing, and I like your sharing that it's going to be an ecosystem. So besides the exchange, I would like to turn to the asset manager, Junyi. As asset manager, could you also provide us some insights into the role UOBMA aims to play as responsible stewards to drive sustainability in the world, and more specifically in Asia?
Thanks, Ada. So we at UOB Asset Management actually do our part by adopting an inside-out sustainability approach. From the inside, we enhance our investment and solution in sustainability, as well as deepening the sustainability knowledge of our staff. On the outside, we showcase sustainability leadership by providing platform and collaborating with our partners and our clients. UBM has become a signatory to UNPRI on 2nd January 2020. So as an asset manager based in Singapore, we are also a signatory to our local stewardship code, Singapore Stewardship Principle, SSP, for responsible investor. So as asset manager, we therefore play our role as responsible stewards by providing sustainable investment opportunity to our investor. This is done through combining our sustainability expertise with a strong regional footprint to engage with the companies in this region. We sometimes send questionnaire and organize meeting with the management of the companies in the region on ESG related issue. And our proxy voting framework also take into consideration internationally recognized sustainability related initiative and also support resolution that advance the fights against climate change. Back to you, Ada.
Thank you. Thanks for sharing from the asset manager point of view. And I think no matter it's a listed company or asset manager or the companies that you are investing, there is no way to escape from the corporate real estate as we all have to use it. So with that, I would like to turn to Sam. Do you see real estate investors, landlords, tenants, those stakeholders in the real estate sector put a stronger stress on sustainability? And more specifically, could you share with us, do you see any green premium on rents or prices of sustainable buildings?
Yeah, that's a great question. And thank you very much for letting me join and participate in this great discussion. So the demand for sustainability has gone crazy over the past 18 months to 2 years, particularly across Europe, but globally, as we've seen with those GRESB numbers just going off the charts upwards. And those dynamics have really resulted in changes in pricing in a big way across Europe in particular, where I'm looking. And the reason for that is multi. So investors want to see their strategies distributed across their investments. That trickles down into the individual buildings. Buildings are trying to differentiate themselves in order to be competitive. And so that is affecting pricing. And right now there is definitely a green premium, particularly in urban centers where headquarters are and where corporates are trying to attract talent, young people who care about this in a big way. So we're seeing that, we're seeing things like GRESB really drive that growth, and that's not going to stop. As we heard earlier, as Ruben said, shining a light on these things has really made it easier to track. And that's what we're doing in our valuations team for sure at the moment, to see what that green premium looks like. But also, I think what's becoming more interesting is the brown discount. So what happens if you don't do anything and your buildings aren't aligned to sustainability practices, in particular climate change, is that you could see that you're not staying still, you're actually going backwards, and people are discounting your buildings. And that's happening more and more in the UK and Europe, where the legislative signals are stronger. And what that means is that buildings are starting to be discounted on acquisition. The due diligence process is reducing the price that they're bidding. And we've even seen some buildings, walking away from tenants that are undesirable to have within the portfolio because they present a risk to corporate responsibility. So all of this is happening. It's very dynamic at the moment, which is really exciting, but I'll have to admit, probably quite stressful for some investors. So the message is stay on the sustainability and try and get your GRESB 5 stars.
Yes, and also I think the message is getting stronger. I think this week we are going to have the COP26, and there will be a built environment day, which was the first time we have this. The ambition is to halve the built environment's emissions by 2030 and establish the built environment as a major solution provider to the climate crisis. So we have already seen many countries set the clear net zero carbon targets. I've mentioned about Japan and mainland China. Here I am in Hong Kong, and I think in Singapore and South Korea. We are seeing more and more. So Sam, I would like to also extend this discussion with you. So what's the expectations we are going to have with the upcoming COP26? And are you seeing the real estate industry on the right track to achieve these net zero emissions targets? And maybe how to mitigate the physical risk against the climate?
Yeah, it's a really important question. And one of the things that came out of the last major COP in Paris was clarity. It was a little bit more clarity as to what the target is, where do we need to get to, so that more governments and more of society and business can align with that future. And I think that that's really important right now, because there are, now that we're really getting into this and starting to properly decarbonize, there are loads of questions. And what we don't want to do is find ourselves with stranded assets because we made the wrong decisions in how we become sustainable. So that's the key thing that I'm hoping to come out of COP, is that things like natural capital and other topics get better clarity so that we can mobilize finance and buildings towards achieving that. Because buildings themselves, 30 to 40% of emissions happen within the built environment globally. And I think that means that we have a remarkable opportunity to be a part of the solution, which is really, really exciting. But also a risk, I think, as well, that we need to manage. Last week, the Science Based Targets Initiative out of London, released their net zero standard, or their net zero guidance. So if you want to become a net zero science-based target, verified target, you need to align with this. And it was really, really robust. What was really interesting about it was just how rigorous it was. And I recall back when the first science-based target initiative document came out, we thought, wow, that's pretty incredible. I wonder if anybody's ever going to align to that, because it was a bit radical at the time. Well, this is the same again. And as we saw last time, lots of corporates, I think there's close to 2,000 corporates signed up to it in some way, shape, or form. And I'm expecting we'll see that again. And what this really is about reducing the amount of greenwashing that is involved. It's a risk management discussion, because if we can make sure that we are plotting a target which has this level of ambition in it, we won't be at risk of getting caught out for greenwashing, or caught out doing something that isn't necessarily in line with best practice, or having to redo stuff later down the path. We can actually set a proper long-term target, which will then be future-proof and actually lead to commercial value as the whole economy transitions to this zero carbon economy. There's going to be loads of commercial value to be had. As Jade was saying, this amount of money that needs to be invested is vast. I mean, there's so many zeros in that, it's not even funny. And to do that investment needs to be flowed, and that investment means returns to those who are on top of it, and really take the opportunity to make it matter.
Yes, thanks, Sam. And Jade, as Sam has mentioned, so how can the exchange tap on this opportunity, and maybe how are we going to structure the products and solutions that investors or the listed companies are going to involve? I think, can you also give us some information or some highlights about Green REIT Index for Asia Pacific, which was recently launched, and how does it going to cover the environmental performance aspects of REITs?
Yeah, absolutely. Very exciting for us. We just launched it, so very happy to share about it. So I think to start, it's a beautiful thing that we are a multi-asset exchange. So SGX is a multi-asset exchange. And so we've got various touch points with multiple stakeholders across the financial ecosystem. And we really look to integrate climate and broader sustainability considerations into our products and solutions, where possible. So we've just recently launched a product, Green REIT Index, in conjunction with UOB Asset Management. And it uses the GRESB asset assessment data to deliver improved risk-adjusted performance by rewarding REITs with a higher weight based on the environmental performance of the REITs. So if we look at the 4 indicators that we used energy consumption, water consumption, greenhouse gas emissions, and green building certifications. So it's an APAC-focused Green REIT Index, encouraging capital to flow towards and reward companies, portfolios, and buildings that generate positive environmental and social outcomes. It also allows investors to send a clear signal to the market by reallocating capital towards REITs that are the most successful at mitigating ESG risk, while also incentivizing laggards to catch up. So I just want to touch on what Sam was saying in terms of COP. So SGX, we very excited that we were one of the founding members of the Net Zero Financial Services Providers Alliance, and has also joined the GFAN, so the Glasgow Financial Alliance for Net Zero. And we're actually the first Asian exchange to commit to 1.5 degree aligned science-based emission targets across scope 1, 2, and 3. And currently our CEO, Bun Chai, and our head of sustainability, Harry Cho, are at some of the COP events to share on behalf of the ecosystem here in Asia, the transition needs and the reality to reduce fragmentations between sectors and countries. And we're hoping to create a network effect, if you will. So just sharing on that one.
Thanks a lot. And as you have mentioned about the network effect, I want to turn to Junyi. So you've mentioned the REIT is also in conjunction with UOBMA to establish. So how UOBMA turning the climate ambition to climate action, and how does it affect or translate into your real estate investment portfolios?
Thanks, Ada. Well, first of all, UBM believes that companies should treat climate-related risks as material to their businesses and align their disclosure with the recommendation of the Task Force on Climate-Related Financial Disclosure, TCFD. As we all know, today, real estate contributes to approximately 40% of the world's carbon emissions. So with key cities in Asia like Singapore, Jakarta, Bangkok, Hong Kong, and Tokyo being more exposed to climate change, risks like rising sea level, typhoons, and floods. So there has been greater pressure on real estate companies in Asia to move faster to reduce their carbon emissions. I think as Jade from SGS just mentioned, UBM has recently, worked with IH, from SGX to construct the IH UOB APEC Green REITs Index. So it's first Green REITs Index to be launched in Asia using GRESB scoring. And in partnership with UOB, SGX, and GRESB, the index is designed to select high-yielding and environmentally positive real estate assets within the Asia-Pacific region, including Japan. And it covers 50 high-yielding REITs with superior environmental performance based on GRESB's real estate assessment. So investors, as a result, can therefore invest for both profit and purpose with the IH UOB APEC Green REIT Index. Back to you, Ada.
Thank you. And this also highlights for the REITs and also the landlords, if you want to be in the REIT index, I guess you also have to look into more closer to GRESB and be able to be evaluated. So Robin, I would like to turn it back to you, as we have talked a lot and also cover about the climate change and risk. So what are the expectations from the real estate investors regarding the physical and transition risk management? Robin, I think you have some slides to share as well, right?
Absolutely. Let me do that now. Yes, obviously, I mean, it's great to set ambitious targets, but to what extent is the industry setting those targets? I mean, we need those kind of commitments for the built environment to transition to net zero. And according to this year's GRESB results, it's actually very promising to see that the trend in our industry is very positive. So we ask real estate companies and funds to what extent they set targets, either net zero targets, other carbon targets, or no targets at all. And we've seen this year that more than 3 times as many participants now have set net zero targets compared to 2019. So that's a pretty big increasement from last year and the previous year. But at the same time, as we mentioned, governments as well as asset owners, including CBRE, are rapidly showing their commitment to get to net zero. It does look like the real estate industry will need to further step up its game, I would say. And the other potential issue there, as Sam already mentioned, is the risk of greenwash. So we've seen a wealth of companies indeed committing to net zero, more or less declaring where the finish line is, but not really telling how to get there, right? So in that regard, it is important that we have the tools and the frameworks to report and show that those ambitions are more than just words. So if you look at the progress and the evolution of the GRESB assessment, that's exactly what we are trying to do. So we are not just trying to ask, what are you doing? What targets do you set for policies? But we're trying to measure to what extent those companies are actually in line with those net zero target commitments. And I'll show you what it looks like later on. We also heard quite a bit about climate risk, risk of stranded assets. So this year, what we did is we aligned some of our new indicators in the assessment with the 11 recommended disclosures from TCFD. And what we did is we analyzed the adoption of climate-related risk identification processes, as well as risk impact assessments. And the results show that overall, really the majority of these real estate companies and managers have proper processes in place, even though it's less the case in Asia. It shows that we're on the right track. And if you ask me, I would say that we can expect these kind of climate risk processes to improve and increase. Because by now, as we are indeed, happening or looking what's happening at COP26 in Glasgow, it is widely acknowledged that climate-related risks pose financial risks or even financial system risks that will adversely impact investment outcomes, including investments in the real estate sector. So as such, we understand and we see that investors want to understand how these risks are managed or how they might impact a company's strategy, operation, or more importantly, the intrinsic value of the underlying assets. So yeah, I expect that these kind of risk management, identification, and impact assessment processes to only increase in the years to come, partially by those investors, but definitely also by the financial regulators. In the meantime, at GRESB, we're certainly not sitting on our hands. We are actually working on a number of new climate-related products, of which one is a TCFD alignment report. And this report shows how real estate companies and managers align with the 11 recommended disclosures based on information already reported to the GRESB assessment. So it will definitely help those that are lagging behind without further increasing the reporting burden. And the other product is a transition risk tool, which shows at the portfolio level which assets are net zero aligned and which are most exposed to transition risk over time. Indeed, there is a risk of stranded assets for which there might not be any future buyers or tenants because they don't comply with regulations. And investors have identified this as a massive risk. So yeah, obviously these kind of products will help our different stakeholders better identify and manage risks, but also opportunities for improvement within their investment portfolios.
Thank you, Robin. I think we've already touched on the increasing requirements, and this is also related to more governments mandating reporting on climate risk in line with the TCFD and recommendations. And in the EU, I think the Sustainable Finance Disclosure Regulation imposed mandatory ESG disclosure, that is obligations for asset managers and also other financial market participants. Sam, can you explain more for the audience in Asia Pacific what does SFDR means and how will it affect asset managers?
Yeah, absolutely. This is a hot topic for sure. So SFDR has been called anti-greenwash legislation. So what's really important to understand about SFDR is if you're marketing to any European investor, you need to have this in order. So that's hugely important. And what that does is provide some definitions as to what is green and what isn't, which is really helpful actually. And so when you're setting up your marketing, you can declare, if you're declaring yourself as an ESG fund, you can declare yourself as a Article 6 and Article 8 or Article 9. The Article 6 is like, well, it means that you've acknowledged it, but most organizations are avoiding that because it doesn't really lead to enough positive recognition of ESG impacts and risks. Article 8 seems to be where most investors are putting their focus, and that's because it basically means that you achieve a minimum standard of acknowledging risks, and you have the data in order. And then Article 9 is way more ambitious in that you are taking the lead in specifically delivering a sustainable impact whilst doing no harm anywhere else, like Article 8 sets out. And this minimum standard, I think, is really, really important, because what it says is I have to do this, and I think up until now, funds have been able to determine, or REITs and funds have been able to determine what success looks like and then apply their criteria to it. Whereas now the EU has found criteria, and that's resulted in many organizations having to sort of rejig their messaging and make it clearer what they originally meant when they said that they were an ESG fund, which I think is part of the shakeout that has to happen in sustainability. So that's on the EU side. It's worth saying, just to follow up, Ruben, on this TCFD, is the UK has legislated and mandated TCFD rollout for major listed companies, and it's moving through asset managers and so forth into the economy. And it's one of the first to do so. It's among the first, but we're going to see this internationally. And the reason for it is very clear. It provides a good assessment of climate risks, no matter where you are in the world. And the flexibility that it provides means that actually, from a valuation perspective, from a real estate valuation perspective, this is how you manage risks. This is how you manage the future financial risks of climate to your organization. So I think it's hugely important. When we talk about the transition risks within TCFD, what we're really talking about is whether or not people are going to buy your product in the future, whether or not people want to be in your buildings in the future, whether or not your buildings will become devalued because of the physical and transition climate risks associated with it. And that's something that we're looking at in a big way in CBRE, particularly in our valuations team, how we can align with that so that the value drivers are very clear. So there's what's most important to take away here is that there's legislation happening in a big way. There's no turning back, because this is getting written into law, and it's vitally important for us to save our planet. But also, it's the only way forward is to really protect value by aligning yourself with something ambitious so that you can deliver decarbonized buildings as fast as possible and gain a competitive advantage in the market.
Thanks, Sam, for sharing what is happening in the EMEA market. So turning to Asia, turning to Junyi, from the asset manager's point of view, are you expecting something similar from the policymakers and regulators in Asia? And would you expect what will be the impact on our industry?
Well, in Asia itself, we do see similar initiative to the Sfdr being launched. ASEAN launch is ASEAN taxonomy to align regulation and standardized disclosure. Hong Kong regulator, the Security Future Commission, enhanced its disclosure requirement for ESG funds effective January 2022. Then Taiwan's regulator, the Financial Supervisory Commission, followed closely. The Malaysian regulator, Security Commission Malaysia, also introduced similar guidelines on sustainable and responsible investment fund. Well, on a more local context in Singapore, MAS most recently issued a guideline entitled Environmental Risk Management, which provide a framework for asset manager to adopt. Regulation play an important role in transparency. I think that is very important. By standardizing disclosure for sustainability-focused funds, this serves as a potential measure to mitigate greenwashing risk. I think we have been repeating the greenwashing. Disclosure in terms of ESG or sustainability objective of the fund or carbon intensity performance will play a big role in helping to allocate capital to the appropriate sustainability-focused fund, reducing greenwashing for investors, and more importantly, we are advancing to more impact type of measurement type of funds to achieve certain targets. So overall, we see this positive development on the regulation front in the industry and help both asset manager and investor to navigate the ESG space better and achieve their impact target.
Thank you for sharing. With that, we have to ask about the regulator, the exchange. So SGX recently proposed a common set of core ESG metrics. So to what extent this is aligned with the mandatory impact indicators under Sfdr? And do you see reporting on these indicators will become mandatory in the near future? Jade?
So just to touch on what the rest of the panel has said, there's increasing investor demand for data that is consistently comparable and easily verifiable, as well as harmonization of sustainability reporting standards globally. So the direction of travel appears to be that the market reports on more standardized set of ESG metrics in the future. So climate disclosure is topical. It's getting great emphasis, and SGX did indeed issue a consultation paper, and we are consolidating the responses from the market on the various points that we put out to market. And we're proposing a roadmap, which includes mandatory climate reporting, sustainability reports assurance, directors training on sustainability, sustainability report timeframe, disclosures on board diversity, and indeed, like you mentioned, a common set of core ESG metrics. So we've done a lot of work to map the common ESG reporting standards to narrow down an initial core set of 27 ESG metrics. Institutional investors have validated this core set, and we will be launching an ESG data portal soon in conjunction with the MAS Green Print project, which I know is coming out more and more into the market. Which will contain guidance on disclosures with the flexibility to accommodate future changes in reporting requirements as the market moves. We've also, to lighten the load, ListCos using the ESG data portal have a choice to not publish a separate sustainability report if they choose to. With climate disclosure in particular, SGX is adopting a staged approach on a comply and explain basis in 2022 using the TCFD framework. And then gradually SGX will make TCFD mandatory by sector over 2023 and 2024. As we've noted, other jurisdictions are writing this into law as of April, and we are watching the market as things develop. But this is a rapidly evolving space, and with the International Sustainability Standards Boards being set up by the IFRS Foundation, it's certainly not going to be slowing down.
Absolutely. I'm also feeling this in Hong Kong with HKEX and SFC are doing similar things. So with that, I would like to turn to Robin. So how will GRESB assessment and results evolve to respond to these new ESG regulations?
Yeah, so first of all, being a standard ourselves, we understand that with many different frameworks out there, existing regulations, new regulations coming into effect, it can be quite challenging to see the forest for the trees. I mean, there's this alphabet soup of ESG reporting frameworks, benchmarks, and so on. And so we definitely support harmonization between those different frameworks, even though they might have a slightly different purpose. So that's very important. So that also means that we have global alliances with the likes of PRI, GRI. As mentioned, we have aligned our assessment with the TCFD recommendations. We're working with SGBC as well. But even then, I would say, yeah, let's harmonize that alphabet soup ASAP. At the same time, we are very narrowly looking at the different regulatory developments, as mentioned by Sam, and thanks for the great explanation, Sam, better than I could have done. Yeah, SFDR in Europe is, everyone's looking at it and how it will impact financial market participants as well as the products that they provide. So in order to, again, streamlining reporting and reducing the burden and harmonization, we have mapped our existing assessments with the impact indicators under SFDR. And in Q1 of next year, we will release a SFDR reporting solution for those companies that already participate in GRESB, which means they can fill out a number of additional or complementary indicators and then use that as their SFDR reporting and be compliant with those regulations. And at the same time, still use that information to understand how they perform on an absolute basis. And of course, also how they compare with their peers, understanding where they can improve their performance overall. So I think that's an important one. I also received a question via the Q&A in terms of what kind of changes we might see in the assessment in 2022. I'm very happy to say minimal changes. Let me very quickly share a slide, because we recently announced that we are entering a 18-month stakeholder engagement process together with our industry, defining a future vision for the assessments, including a strategy and a roadmap. And this is to ensure that the assessments will provide value in the future to all of our industry stakeholders and members, but also that they remain relevant for those stakeholders. And as part of this, we will run a quite extensive process over the next year and a half, where we invite all of our stakeholders to participate in surveys, in discussion sessions, to make sure that whatever we do still is valuable and has a purpose in 5 and 10 years' time. But in the meantime, it also means that until we finalize the vision, strategy, and roadmap, we will keep all changes to the assessments to a minimum, so everyone knows what to expect. But also, once we release the roadmap, based on consensus of the industry stakeholders, people also expect where the assessments will evolve to.
Thank you, Robin. Wow, we have 10 minutes left. I cannot believe we have discussed so much. So I think we are still living with this pandemic, and I just want to lightly to ask Robin, so what are the opportunities and challenges COVID has brought to us on the ESG?
Well, at least ensure that some of the buildings performed with a much lower environmental footprint than in previous years. But I think even though we are returning back to the office and return to some kind of normal, in part, I believe we will see a hybrid of working from home, satellite offices, and so on. But also in the end, what real estate provides is a location to meet and to work and to shop and to live and so on. So that function will not go away. I think it will change over time gradually. Personally, I think the whole stigma that was on that light on working from home has been shattered by COVID. So we all know that we can still be very functional human beings no matter where we are, even though homeschooling might not always be that easy with screaming kids around. I had a couple of my kids come in during very important calls, but I was like, hey, this is my mom, say hello now. Let me work again. So that's perhaps more the broader picture of COVID. I do think that it has opened some of the eyes of different stakeholders, investors and managers alike, around social outcomes and impacts. So think about health and well-being, on-site safety, supply chains, and how COVID has influenced supply chains, and all for the better. And perhaps the most important thing is that as the pandemic has exacerbated some of the underlying chronic and acute issues, I would say that environmental and social impacts and outcomes really have risen to the top of the investor agenda. And so, as mentioned a couple of times by some of the other panelists, this is not a trend in terms of something that pops up and then eases away. It has manifested itself at the top of agendas, and I would say that's in part thanks to the pandemic. So yeah, perhaps there's a bit of a silver lining despite, of course, the tragic impact.
Okay, thank you. And turning to investors, Junyi, so do you think the pandemic is impacting your investment decision in a positive way?
Surely, I think with COVID-19, there has been more focus towards social issues. This includes, global unemployment, social inequalities, and healthcare benefits, in many industries. And additionally, the pandemic has also resulted in greater shift in capital towards sustainable assets. I just want to quote an example. A leading glove manufacturer in the region saw its price surge, due to the COVID pandemic because of the demand, for gloves. However, there were outstanding ESG issues regarding labor and COVID management, especially for migrant workers. Subsequently, the company was slapped with a hefty ban, resulting in the sharp fall in the share prices. So this is a prime case example of how ESG, in particular the social pillars, flags up material impact in companies. So I think going forward, with more funds, flowing into the sustainable assets in the post-pandemic world, there will be even more focus besides just environment, but also social impact that the company bring to the society.
Great sharing, thanks a lot. And Jade, I think SGX has recently released a consultation paper on climate and diversity, as we mentioned about the social part of this ESG, and why diversity is a material topic for SGX. Can you share us a little bit more?
Sure. So global demand for disclosure on board diversity has been growing, with specific sets of metrics to determine companies' progress towards equal representation of gender throughout levels of the organization. The Council for Board Diversity has also highlighted key global shifts supporting the need for greater diversity. In particular, institutional investors have publicly announced that they would enhance their influence over companies on gender diversity, and in some cases selectively vote against nominations where there were few or no women on the board. Going back to the COVID discussion, COVID-19 induced uncertainty, I think, will continue to affect companies for some time to come. Having board diversity provides a broad-based judgment of risks and opportunities that is needed to enable continued success during times of heightened uncertainty, perhaps even providing a competitive edge. So I think that's in a nutshell why it's a material topic for us at SGX.
Thanks a lot, thanks. And Sam, for turning to the real estate part, so how COVID has changed the way real estate investors invest, and also maybe for the corporate tenants, what's the behavioral change they have?
Yeah, I think it's nothing like a crisis to bring your attention to the problem of crises, right? The one thing that COVID has done is it's made a fairly large scale global crisis a real thing rather than a theory. And I think that that's meant that people have turned their attention to things like climate change, but also all of the other social indicators that were just mentioned. And I think that that's really interesting stuff. The one thing that we're seeing in a big way is this sort of bringing people back and finding that new balance. And what that has meant, particularly in corporate offices, but also in other sectors, is that this attraction, this war on talent, has meant that sustainable buildings are really outperforming. There's a clear, there's a clear distance between premium, great space, sustainable space in London, for example, than there is secondary space that's not great. And it's not even slowing down. Like, that's just taking off like a rocket ship. And what the big challenge is, I think, is to pick up that long tail and lift it as well, because everybody needs a great space to work in. Well-being has gone crazy, obviously, because we want great spaces. And I think that that's a really great part of the outcome of this, is that it's no longer acceptable to have a drab, awful office. People just won't come into it. And so we need to recreate real estate in a way that is a good experience. It matters. The social assets that an office or a workplace have need to be explored more, and so that we have workplaces that reflect the cultures that we want rather than what we're left with. And I think that's a really good thing. For real estate, this means that right now, if you've got something doing well on GRESB, you've got like good building certifications, you can explain the well-being features succinctly, and so forth. You're outperforming the market. You're maximizing your returns. I think that there's a wonderful opportunity for people to hoover up secondary real estate at the moment and reconfigure it to be wonderful spaces as well, and get some benefit from that. So let's watch that. Let's watch the markets do the work. It's be very exciting.
Yeah, let's watch that. And I think we have covered a lot. We just have 1 minute left. The last question I want to have with you is, if we look at ESG 10 years from now, what to expect? Give me a very short answer. What will change the most? Are we going to achieve carbon neutrality? And the third question is, what should we start to do today to make an impact? May I start with Robin?
Yeah, thanks. Great question. As Kermit the Frog said, it's not easy being green. So I understand that, you know, there are quite some challenges and complexities around development, operation, management of green net zero buildings that are resilient, that provide positive socio-economic benefits for society. But I would say we don't need to wait for the data to be perfect. We don't need to wait for technology to be there because it's already there to a large extent. I would say act. Let's roll up our sleeve and act now, because we can change. And as the pandemic showed, we can change overnight. So I would say let's act now.
Great. How about Sam?
Well, I think we're going to have better buildings, and that's really exciting. So 10 years ago, if we look back 10 years and we look at the amount of change that's happened without sustainability being as a focus over that time, it's been pretty great. But let's just accelerate that. Let's just have really good buildings, right? I think that's just wonderful. Yeah.
Okay. Junyi?
Well, it's difficult to predict what future holds. It's important for us to be more conscious about the footprints that we leave behind and the impact that we bring, positively or negatively. Achievement of carbon neutrality is not an individual effort, but requires everyone's collaboration to become an achievable and realistic goal. I think a little goes a long way. I think in our capacity as an asset manager, we can look towards supporting companies in their transition towards a low carbon economy and educate the masses on the tangible impact that they can bring towards sustainable investing.
Thank you. And lastly, Jade?
So there's no one size fits all, especially when we look at the Asian region. I think the challenge, particularly in Asia, is how we facilitate Asia's holistic transition to a more sustainable future while balancing the diverse region's unique environmental, social, and economic needs. That said, I'm going to reiterate what Ruben says. You have to take steps. Even if it's a baby step today, there'll be another step tomorrow, and eventually you'll get there. So act now with what you have available. And as you can hear, the support is there in the industry, and we're looking to stakeholders to develop collaboration to support the various journeys that everybody's on.
Thank you. So Ruben, I would like to pass it back to you. We concluded the panel discussions.
Thank you. And I know we're running slightly over time, but I do want to have a recognition of our regional sector leaders that are the highest scoring participants in their region and sector. And in recognition of their leadership, we have decided to plant another forest in collaboration with Treedom, which works with local communities around the globe to plant trees. And of course, trees are not only good to absorb carbon, but also to enrich biodiversity, which is a very upcoming topic within the investor community as well, but also to support those local communities with additional food sources, education, economic opportunities, and so on. So for us, it's a very inspiring program to support. And again, we do so in recognition of the sector leaders, which are for this year from Asia, virtual drum roll. For standing investments, we have ARA Asset Management, Advanced Residence Investment Corporation, Ascot Residence Trust, Capitaland, CDL, DBJ, Diamond Realty Management, Fraser's Property, GLP, Goodman, Aegis Asset Management, Japan Holding REIT, Lendlease, M&G Real Estate, NTT UD REIT, Suntec REIT, Nuveen Real Estate, and Swire Properties. And in a development benchmark, take away the sector leaders awards are DLF, ESR Kendall Square, Godrej Properties, Mitsubishi Estate, Phoenix Property Investors, Swire Properties, the Red Sea Development Company, Tokyo Tatemono, and last but certainly not least, White Peak. So on behalf of everyone here at GRESB, congratulations on your outstanding job, and thank you all for your leadership and ongoing commitment. It's really through these kind of better performance improvements that we can continue to innovate and challenge ourselves to really push harder year on year. So again, on behalf of everyone at GRESB, thank you for leading from the front, and congratulations with your outstanding achievements. Back to you, Ada.
Thank you, Robin. And I think with that, we will conclude the section today. We have gone through so much to talk about the ecosystem, the pressing regulatory changes. But I do think that we, as I think Jay has mentioned, every baby step will count. So hopefully next year, when we are going to see 2022 results, it will be much better. Thank you very much. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye.
Thanks.
Thanks so much. Bye.